Oh, the last area that I would talk about is as you approach 2024, I want people to know you have a choice to love your sales tax return process. We talk to a lot of people who maybe outsource, maybe they have fully automated, maybe they're using an outside firm or they're doing it internally, and they express frustration, concern consistently.
Hello, you are listening to the Saltcast by Peisner Johnson, the sales tax people. And for the last 30 plus years, we have been providing sales tax solutions and peace of mind to everyone we talk to. All right, well, let's get started. And appreciate you guys being on. It feels like it's been a while. Different vacations, different trips out of town, visiting clients. We haven't been able to sync up for a few weeks, it seems like, but it's given me a good opportunity to revamp how we structure our podcast. So I'm excited to see how it goes today, guys.
Love it.
But I hope you guys have had a great few weeks. But today's podcast, I wanted to kind of focus in, make sure we're getting to our audience and anybody who listens to the podcast, watches the videos, to make sure that their sales tax planning for 2024 is underway. And we're talking about what they need to be looking at, because tax planning in general, I think most businesses do, especially if they have in-house accountants or they have, the third-party accountant looking at their books. They're making sure that their tax planning going to the next year is set up for them to be successful financially, and they're maximizing, their tax strategy. But I think what you guys have seen, and I think why PJCO was almost created in the beginning, is sales tax is often overlooked, and it's not really included in their planning strategy. And so they go years without really looking at it, and all of a sudden there's some things out of whack, and that they have exposure, and no one likes to be exposed. And I was hoping you guys would be able to cover some key areas when they should be looking, everybody should be looking at when it comes to their sales tax planning for 2024.
Yeah, it's a good question. Most people that deal with sales tax are dealing with issues on a monthly basis, right? I mean, they have consistent requirements, but that doesn't mean that as you approach these year end and as you're planning for the next year, you shouldn't take a look at the overall picture of what sales tax looks like for you. When you think about where we are today, as we approach 2024, we are in the new landscape of sales tax. We don't have to go back into a history lesson here, but the fact is, across the board, people need to be recognizing that sales tax is a big issue, and they need to make sure that they work to be compliant across the board, across the U.S., because we call sales tax the biggest margin killer from a tax standpoint. Because if you're supposed to be compliant and you're not compliant, then oftentimes the tax comes out of your own pocket with penalty and interest instead of being collected at the time of the transaction, right?
Tragic.
And it is tragic. And it comes out, at percentages of 10, 20, 30% with tax, penalty, and interest. And if you're running your business at a 10% margin, then that can just kill the margins that you had. So. But as you approach a new year, maybe you're looking at an acquisition, maybe either as the buyer or the seller, you're looking at a merger. Maybe you've had some significant growth and need to understand if that creates some additional responsibility across other states. Maybe you've started a new product line, or you're selling new products or new services. Maybe you're just dealing in states who have had some legislative changes that have added some complexity, because more and more states are, even on taxable services or goods on the books, sometimes just the definition can be expanded in a way that would incorporate some of the things that you sell that maybe you haven't been collecting tax on in the past. And so you need to be aware of digital products, intangibles, software as a service is always a big one, because most states don't just say, hey, software as a service is taxable. They say, in Texas, software as a service is considered a data processing service, and data processing services are taxable. And so sometimes you just have to think about the category, you have to think about its definition in that state, how it might be classified. So it's good to look at this across the board. And so there's at least two areas that we typically encourage people to look at, especially aside from your processes that are already in place, and those are Nexus, right, in the world that we're in, and has your footprint expanded, and taxability of your goods and services. Those are two hot spots to consider as you approach 2024. Paul, maybe you have something to say on the topic of Nexus.
Yeah, no, it's I think it's wise to review, especially as you get to the end of the year. I mean, January is the busiest month in sales tax because you got all the monthly, quarterly, annual filings that are due. And unless you're operating on a fiscal year, it's usually when people are reviewing for the next calendar year. From a Nexus perspective, a lot of the states look at, from an economic Nexus perspective, I should clarify, that they look at the calendar year. And so it's a good idea come January to review what your transactions and sales were like in all states, and what kind of business operations you have going on there. Do we just have customers that are in that state? Do we have any type of presence? Are we visiting any type of trade shows? And then, what do we have coming up next year that we're planning? Are we going to be letting employees go? Are we going to be closing warehouses down? Are we going to be expanding? Because that will have an impact from a Nexus perspective. That'll have an impact on where you're registered, or where you stay registered, or where you get registered in the coming year.
Yeah, two of the big areas I think in Nexus is obviously the expansion of sales, but as you consider state by state, just as you indicated, some states look at the following 12 months. Some states look at calendar months, or the last calendar year. Some states are looking at your total gross sales when it comes to an economic threshold. Some of the states are looking at just your taxable sales. So, discussion on taxability is important as well to understand if you've exceeded their threshold in a particular state. And then some states allow you to exclude sales that are made on a marketplace platform. And so those are all things to consider. But to Paul's point, a lot of states look at your last calendar year of transactions, regardless of the transactions they're looking at. Yeah. It's a good time as you approach the end of the year and as you plan for the upcoming year to see if there's been any additional states that you have or may exceed the threshold, and make a decision on whether you should go ahead and get registered, so you're not stuck in that tragic situation of pulling tax out of your own pocket with penalty and interest. But to that point, go ahead, sorry.
I was just going to say, depending on the business that you're running, if you're a retail shop, you're entering into the holiday season, business could be picking up for you, and inventory could be moving about, and there could be a lot of changes as far as your business footprint goes, as well as from a sales threshold perspective. So definitely a good thing to keep in mind as we enter these next few months.
There's always a case where you may need to consider deregistering.
Right.
Maybe things have changed in such a way that you no longer have Nexus in a particular state, and deregistration may occur. We have seen some companies, and we've done some deregistration projects to help companies deregister, where all of their sales are on a marketplace platform. And there are several states, if not most of the states, that would not require you to remain registered. In fact, there are some states that would require you to stay registered, but there's no responsibility or exposure that you have, even though they would like you to remain registered.
Exactly.
managing that on a monthly basis can often be unnecessary if that's the case. So it's always good to look at that and figure out what might be next there. But kind of segueing from Nexus, when you consider, it's only my taxable sales that are considered in my economic Nexus footprint. It's really important to recognize the taxability of your goods and services. You may, for instance, you may feel like you have a good setup on that. A lot of people have moved to automated solutions that give you rooftop rates. They're real time. And then you've got product codes or taxability that's built into that automated solution, and which is fantastic. But maybe you need to consider the codes that have been selected. Maybe you need to consider new goods and services that might be added to those platforms. Those platforms are often continuing to do research and get more detailed and more specific and add hundreds, if not thousands, of codes in a year's time. And so it's always advisable to go into your shopping carts that might have rooftop rates and calculations already built in, or the automated solution that you have attached to your billing system, and just make sure that those codes are hitting or your SKUs are hitting taxability codes that truly match up with the category or classification of your good or service. You don't want to be in a situation where you undertax or overtax. You don't want your customers complaining that you're taxing them on something that they believe is not taxable in their state, or they're certain of it, and it's just an error on the code. But a review of all your goods and services, and especially if you're expanding, and especially identifying states that are making some legislative changes when it comes to what's taxable in their state, is always a smart thing to do before you approach the new year.
Yeah, for sure. I would say we meet with a number of clients who indicate that, I used to just be in this one location, or I just used to sell this one type of product or service, but now we're going to expand and start selling other things. Well, for our clients who are in the food industry, now they're starting to sell physical, tangible product. Well, that's no longer a food product, and so you want to make certain that that code gets updated. This isn't a dietary supplement anymore. This isn't a t-shirt anymore. This isn't a water bottle or a yoga mat or whatever it may be, And so constantly being aware, because tax generally, let's just be honest, tax departments generally are the last to find out. It's usually sales and marketing, and they're out there just blasting this stuff out. And tax is like, wait. We can't just sell that to California without, taking into account everything that's going on there. So it's a great idea to be aware of, or at least, kind of remind people that, hey, we're still over here in the closet. We're still trying to make things work.
Yeah. We get those comments quite a bit, actually. Someone working the accounting or the tax department, and they're the last to know that you're selling a new good or service that could create some situations for you. And sometimes the law is I think the word nuanced is used too much, but I think it's the right word. It really is nuanced. So sometimes you can believe that you're providing a service, and you know what you're doing, and you know how you define that, but the state may define it differently. I mentioned this earlier with software as a service versus data processing services. And so sometimes you might have to dig a little bit deeper and reach out to somebody to just understand, are there some letter rulings? Are there some cases? Have there been some decisions related to these types of transactions? And is there a firm decision on what we do here, right? Because it's not always just as straightforward as you would hope. So as you run into some of those types of situations, then we always encourage you to give us a shout. What's beautiful in talking with us, it doesn't cost you anything to talk to us. We're going to talk at you in podcast format quite a bit. We're hoping that we share some good information that will be helpful to you. But as you face some more complex situations, or you're just unsure and you want to collaborate, gain some confidence on the direction that you're taking, then we love to do that and help people gain peace of mind when it comes to different decisions that they're making. Before we wrap up, I just want to mention two other areas that I think are important as you approach 2024. One is exemption certificates. if you collect a lot of exemption certificates, you might be doing that in a manual process. It could be in an automated solution where you're managing those certificates. But, there are some states and some situations where there's renewals that come up, and you need to make sure that you have a renewed copy. When you may be gaining some additional customers, and you want to make sure that you have those on hand. Now is a good time. I know year end can be pretty busy, but as you approach 2024, a lot of times it's not if you're going to be audited, but when you're audited, you want to make sure that you don't create a huge weeks long or months long project of collecting certificates in those situations. So you just want to be proactive in that approach. So, and for us, back in the day, I would say that exemption certificate management systems, automating that, even we thought was really, really expensive in the approach, but the technology has gotten just dramatically better. The solutions are really incredible, and they're less expensive than they used to be. So if you have a lot of certificates and that's not something that you're doing in an automated fashion, you might think about in the budgetary process, how could we add some budget to add an automated solution that would help us manage these better, more effectively?
Go ahead.
The
flip-flop on that, the flip side is you may be paying for an automated solution and you're finding that, I only have 50 exemption certificates and I can manage those on my own. And so maybe for the new year type of a thing, it's, maybe we get rid of a software or something that's an added cost. But the other thing with the exemption certificates, why you want to look at them now rather than 6 months from now, or at least from a planning perspective, is that there are a number of states that'll issue an annual resale certificate that expires in the calendar year. And so you want to make certain that any exemption certificates that you have that are expiring, that you start contacting the states or contacting the vendors, depending on the circumstance or situation, to make certain that you have updated and valid resale certificates. Just as a friendly reminder, we encourage everybody or all of our clients to at least get new resale or exemption certificates every 3 or 4 years is a good practice, just by way of statute of limitations. A number of certificates don't ever expire, and you can use them for long time, but it's always a good habit just to get those refreshed, and doing that at the end of the year is a very, very good idea.
Speaking of the flip-flop side, as you call it, and refreshing, you just make me think that I just want to be on a beach somewhere, not dealing with exemption certificates. So I do like the imagery. If you look at it on the flip-flop side, automating that could be refreshing, but so could a beach somewhere.
This is true. But I was discussing this just yesterday with a client, and unfortunately, we can't just bury our heads in the sand and ignore it. So going to the beach, although it may be ideal, you can't just bury your feet or bury your hands or bury your head or bury your whole body, in the sand.
Yeah,
or run from it.
Can't hide.
Yeah, an exposure joke comes to mind. But anyway, we should carry on, I think. The last area that I would talk about is as you approach 2024, I want people to know you have a choice to love your sales tax return process. We talk to a lot of people who maybe outsource, maybe they have fully automated, maybe they're using an outside firm or they're doing it internally, and they express frustration, concern consistently. They're just not happy with the solution. And a lot of people feel stuck in that solution, or they settle for whatever solution they have because they feel like it's just way too difficult to change solutions or move in another direction. We spend all this time, effort, and capital in API to connect and whatever the case may be. But you could legitimately pay less money and be much more happier with the solution if you just talk to some people about what that can look like. So we just don't want people to settle. If you're unhappy with your approach to your sales tax processes, but especially your sales tax return processes, then we would love to chat with you. We'd love to hear about your situation. We hear stories all the time, but we do have great answers and good ideas and solutions that can help you sleep better and help you maybe not enjoy sales tax, but really remove it from your plate and truly not have to deal with it. So when you think about, oh man, I'm just going to set it and forget it, oftentimes people end up regretting that because not only can they not forget it, they have to consistently be in it and working to help the solution that they acquired to manage it properly. And that's just super frustrating and annoying. So if you're facing something like that, we really want to chat with you because we have answers for that.
Yeah, and be sure to check us out. I mean, you can find us at thesalestaxpeople.com. Easy to remember. Sometimes Peisner's hard to remember how to spell that. You know, it's PEI, not Peisner, like Thanksgiving pies. It's opposite, but sales tax people, salestaxpeople.com. Yeah, and we invite you to ask any questions you guys might have regarding your sales tax planning going into 2024. And you can email us at info@pj.tax or chat with us on our website. We're available at all times, and make sure and subscribe. And this is where you can get all your sales tax knowledge. Again, Jason, Paul, thank you so much for jumping on. Your guys' wealth of knowledge is always valuable. So again, appreciate you guys being on.
Always a good time. Thanks, Ryan.